Hey guys, John Polemy here, Actionable Intelligence. Got a couple questions on the sent to me from viewers of my videos. I figured I'd answer them sitting out here relaxing by the pool. The first question was about the uranium bull market and how I played it last time, or how I said that I didn't play it correctly. Well, look, I made a video about this already. You can go back and look at it. Basically, I really didn't know what I was doing. I mean, I didn't know the fundamentals of the market. I couldn't tell you how many reactors were operating, how many were under construction. I basically got caught up in the FOMO, and I didn't sell when I should have. And I took a lot of losses when I had a lot of gains that I could have booked. That was a long time ago, and I've since put rules in place that won't happen to me again. I mean, I did make money, but it wasn't what I could have done. And so basically, you know, when you're getting involved in these things, I'm just going to be honest with you guys. I've said this before. Most people should not be investing in individual stocks. They simply do not have the backgrounds. They don't have the knowledge base. They don't have what it takes to do that. They don't have the time. They don't know how to put the effort in. And the studies have all shown, it's one of my marketing tools I use for my newsletter. The studies have shown that most individual investors will underperform the market. That's as simple as that. And if you're going to take the time to be successful, then you have to study what successful people do. You know, success leaves clues, people. It's not hard. So you have to go read about, Seth Klarman, Warren Buffett, Charlie Munger, Howard Marks, all these people. They all have books. They all have put out their writings, and they all have a common theme: buying things when they're cheap, selling them when they're expensive. Your profit in a asset class that you buy is basically going to be determined by what price you pay. If you overpay, if you're out there buying Beyond Meat at 60 times sales, more than likely as an individual investor, you're not going to make money. Like all the Tesla bots. I mean, a Tesla could be a very good car, but it's not a good investment. The company doesn't make any money and it's not cash flow positive. Those are the facts. They are not in dispute. So, the company's overvalued. What you're looking to buy is things that are undervalued, things that the market doesn't like, that's cast off, that are ignored, that are undervalued, that are cheap. Yet they have a catalyst that's going to turn them around. So I underperformed during the last bull market in uranium because I basically didn't know what I was doing. I was jumping on the crowd. I mean, you had a flood in at MacArthur River, I believe, and at Cigar Lake. That kind of really boosted the market because there was concerns for supply. And instead of selling at near the top, I got greedy and thought, well, if uranium's going to go to $130 a pound, maybe it'll go to $150 or $200. And the thinking gets into your mind, the emotions, because you're sitting there for a year and a half, and every single week the uranium price is going up. Every single week the price of uranium stocks are going up. So I now know how to control my emotions. I now understand that you have to sell. You have to put proper valuations on things, and when things become overvalued, you sell them. You don't get married to them. So you can go back and watch the other video. It's basically the same thing. The other question was around offshore drilling stocks and Ensco specifically. Somebody asked me, do I still like it? Yeah, I love it. I love it. I mean, the thing is down 50% in the last, almost month or so. And people say, well, why do you love it? Well, okay, well, let's look at this. The entire company is pretty much valued at about $1.5 billion. If you take the value of all the steel, that means all the rigs and drill ships and semi-submersibles, depending on how you value it, and I use the Basso Offshore Analytics, it's $7 to $8 billion worth of value just in the steel and the rigs. And you can buy that $7 or $8 billion for $1.5 billion. So you're basically buying things at you're buying $1 for 20 cents. Now, the question you have to ask yourself is, right now the industry is being priced for bankruptcy. Do I think the offshore drilling industry is going bankrupt? No, I do not. And a matter of fact, the industry is actually in the midst of a recovery. We're seeing utilization rates go up. We're seeing cash flows at major oil companies increase. We're seeing tenders for contracts increasing. As utilization rates creep up, the supply of rigs will decrease, and therefore they'll start dragging the day rates back up. Yes, is it happening slower than I thought? Absolutely. But it's probably the worst offshore oil market in the history of the industry. It's terrible. So it's going to take some time. And what happens in these type of situations when you have a market that's this depressed, people hate it. People don't. They get bored, sitting here waiting for it to turn. Well, but if you're, this is the difference between the amateur investor and the professional. I mean, there was a big fund this week that puked up a whole bunch of stock in Ensco because they got sick of it. They don't want to wait any longer. So they probably puked up, I think I saw 14 or 15 million shares or something like that. So this is what you're going to see. People move on. They don't want to have dead money. They don't want to sit around and wait for the turn. That's their prerogative. But, the way that the big money is made, I think, is by buying dollars for less than $1. And I think that's what you're doing with the offshore oil industry. Did we get into it a little bit early? Yeah, but I'd rather be earlier than late. I mean, I can wait. I have that patience. And, if you can buy $7 to $8 billion worth of high quality drilling rigs, the steel, if you will, for $1.5 billion. If I had $1.5 billion, I'd go try to buy Ensco. It's that simple. I mean, just in the rigs themselves, the value of the rigs is $7 to $8 billion, but that doesn't count all the relationships they have, all the goodwill that's there with the relationships they have with the oil companies, with the people they have working there. All that type of stuff has a value too. So, they do have excellent contracts with some of their jackups with Saudi Arabia. The jackup market's really on fire. Especially we see how Pemex is putting out a lot of tenders now. So all you have to do is follow the news, and you see that things are improving, and you just have to have the patience. Now that's not for everybody. If you think that the future is electric cars over the next 5 years and it's going to displace 20 or 30 million barrels of oil demand, then you probably shouldn't be involved in this. But what I would say is, people say, well, it's a dying industry, all this stuff. Well, look at a company like Peabody, one of the largest coal companies in the world. Go look at their investor presentation. Go look at their results. That company, because the coal industry might be shrinking in the U.S., but it's expanding overseas. And that company has so much cash flow, they don't know what to do with all the cash. They've had multiple stock buybacks. They've had multiple special dividends. They don't even know what to do with the cash. It's almost comical. And coking coal and thermal coal markets might be declining in the U.S., but the U.S. isn't the center of the universe. The rest of the world, the other 7.5 billion people in the world, are still using coal. And that's an example, I think, of what can happen. And that's an undervalued stock, by the way. I mean, I don't currently own it, but it's just an example of undervaluation. And once the market turns, you generate so much cash, the company doesn't even know what to do with it all. And it kind of reminds me, Scarface are carrying the bundles of cash into the bank in duffel bags. It's kind of the same deal. So, like I said, if you think oil's going away, it's in its decline, you shouldn't be buying oil stocks. But I don't believe that. I don't believe there's enough cobalt and lithium and demand for these cars, electric cars, as people think there is. I've traveled around the world in third world countries, second world countries. People can't afford $70,000, $80,000 electric cars. So petroleum's going to be with us for a while. Petrochemicals, plastics, air travel, transportation of goods, trains, the whole shebang. Yes, electric will encroach into that, but it's going to be a lot longer and less invasive than people think, I believe. So that's it. A couple questions I wanted to answer. Thanks for listening, and we'll talk to you this weekend. Thanks, guys.